specifically the cash value that you can get inside of a life insurance policy. Because when I say, what comes to mind when I say the word life insurance? Probably death benefit. Someone else gets a whole bunch of money, right? You die, your spouse gets that $1,000,000 or whatever that is. So yeah, in a simplistic form, life insurance does do that. Any life insurance product is going to have a death benefit for sure. By definition, that is what it needs to have. But and that's term does not have any other benefits. It'll have a living benefit and a death benefit, sometimes a living benefit. And I'm not here to talk about that, but that's in case you get sick with cancer, heart attack, or stroke, or so forth. So term is very straightforward, very basic, and does not have much more to it than that. And it doesn't build any cash value. So then I start talking to somebody, one of my clients or something, and they'll say, well, what is cash value? I don't understand how that works. Okay, so let me make this simple for you. If you've heard of cash value, you've heard of whole life, but you don't really understand how it works, listen up. This will make it real easy for you. You bought a home before, right? Versus renting. Okay, so when you rent and it comes time to leave, what do you get from all those rent payments you've been paying in? You get absolutely nothing, right? It was a liability. It's an expense, so you don't get anything back. That's renting. That's term. So you could be on a term policy for 30 years, and then on year 31, you say, I can't afford it. It's going away. And you get nothing from all those premiums you've been paying in. Okay. Now, the other scenario is buying a home. So when you make a mortgage payment, you're paying down the loan. So you have to service the loan and the interest, but then you're also paying down the principal, which builds what? Equity, correct? So you have an asset over time. And that's disputable. Some people say your home's not an asset because it's not liquid. You don't get it until you purchase the house. But bear with me. It's not a liability anymore because you're building something of value. So in that definition, maybe it's not 100%, but in that definition, it's an asset. Your life insurance is similar. When you buy a term, it's a liability. When you buy whole life, it's an asset because it builds liquid cash value that you can utilize throughout your life. So people all through the ages have used their life insurance as a vehicle for taking out loans or borrowing money. You know, when you're in a pinch and you need something, there's no qualification. If you need the money from your cash value, you just let the insurance carrier know. It's all pre-qualified because it's collateralized from the death benefit and the cash value that's in there. So it's all they don't ask any questions. There's no qualification. I need 20 grand. I'm buying a car. Okay, great. Where are we sending the check? Right. So you can borrow from your own cash value just the same as you can borrow from your home by refinancing. That equity that you build in your home, you're building that equity in your policy. So when you make your premiums on a term, it just buys a death benefit, maybe a living benefit. When you pay in your premiums on a whole life, you're buying the death benefit with some of that money, but then you're feeding a cash value account with some of that money. Therefore, those policies are more expensive, right? And you're wondering about costs. Yes, they can be more expensive, double, triple, even sometimes 4 times the cost of a term because number one, it's guaranteed for life. Terms, 98% of the time, it's actually a little higher than 98. Most people outlive their policy. So it is a little bit higher of a gamble. Most likely, you're never going to have a policy. If you have a term, most likely it'll never pay out. Odds are. Now, we all get policies. We all get term policies because what if, right? Just in case. But whole life is there if you live to age 100 and beyond. That sucker's paying out no matter what. It also has other options. You can do a reduced paid up, but it builds cash value. So you're doing so much more with your money. Therefore, of course, it's a more expensive product. So don't be shocked if whole life is 3 or 4 times the cost of term because you're getting so much more out of it. You're investing and building an asset. I shouldn't say investing because it's not an investment. Don't misunderstand me. But it is a liquid asset that you can borrow from, you can utilize from funds from, and it's there for the rest of your life. So that's the difference. And the best analogy I can think of is renting versus buying. And all that equity that you get in your property, you got zero equity when you're a renter. So if you have a term policy, you might consider a conversion or you might consider adding a policy that'll outlive your term, that will cover you with some of those smaller expenses that you need end of life. Because a term is great for working years. You need that big $500,000 or $1 million policy, just in case you pass away, and all those working years, all that income can help set up your family for 10 years or 5 years worth of income. Well, tough to do that, really expensive to do that on a whole life, but a whole life can serve you after that when you don't need as much. The kids are grown up, the house is paid way down. You don't need nearly as much. So even a $50,000 whole life to complement your term is a really good way to go, because especially if it's a participating whole life, it's going to grow. That cash value is going to grow. The death benefit's going to grow. And when your term drops off, you've got something that keeps going the rest of your life. And you're not looking for life insurance when you're 65 and it's super expensive, or 75. Okay. So anyways, I hope that helps you understand what equity has to do with life insurance and how you can capitalize on that. And you can actually design a whole life policy for high cash value growth. Not any agent you typically does that. You have to, it's a more advanced market skills to know how to take care of that illustration the right way. But if you want to look and see what those options look like for you, it's a great way to store your cash, let it grow tax-free. You can pull it out tax-free, and get all, equity in your policy, death benefit, cash value, all that stuff. So thanks for listening, and go out there and have an awesome month. And by the way, happy Life Insurance Awareness Month, September. We got a few days left. If you haven't reviewed your policy with someone, it's a great opportunity to do so. I'd love to be that person, or get a hold of your agent, but let somebody look at your policy and go through it with you, and just make sure you have what you think you have, and all that fun stuff. So thanks a lot. And I hope this has been helpful to you. Have an awesome day. Bye.